You are listening to Mining Stock Education.
There's so little capital in this space, means that it's very early days, and the challenge is going to be finding the right kind of companies to invest with and sticking with them. Don't be afraid of the gain. Don't have a fear of losing out on your profit. If you've got a winner, you've got to let your winners ride to a large extent. Your winners will amortize the more numerous losers that you're going to have in the context of playing this market. I also think it's very early.
It's Mining Stock Education, and I am your host, Bill Powers, and you're in for another treat today. A new guest, Michael Kosowan. He is a large investor in the sector, but he was also a mine engineer, worked for issuers, was recruited by Rick Rule many decades ago to work for him as a stockbroker, then was recruited back to the issuer side again, where he was an executive, and he's currently a chairman over a huge gold discovery, TDG Goldcorp. My guest is Michael Kosowan. Michael, thank you for coming on the show today, and let's start with your genesis. You're growing up in Northern Ontario, and then you find your way into the mining industry. How did that occur?
Very accurate description. I mean, during your description, it kind of sounds like I didn't know what to do with my life. And that may be somewhat accurate. I mean, realistically, I started on the technical side of things, learning mining engineering. I had a family sort of procession in front of me who was aligned along that business. And then what I did is I accidentally found the financial world, or it found me. And what I ended up being pretty good with is sort of looking at valuation for junior properties, trying to figure out what they were worth. And then that led into stock analysis and analysis of securities in this space. And, one of my first forays involved working with Rick Rule's group down in Southern California. And that represented a really interesting subset to me because of the fact that what he really looked at doing is applying Graham-Dodd principles, so real basic fundamental stock analysis, to what is otherwise a very speculative and very volatile space. So it's almost like a misnomer or an incorrect fitting, if you will, but it actually ended up being really, really intelligent as far as trying to get to the real source of a lot of these speculative ventures that we know in the mining world.
So when you were growing up in Northern Ontario, there were some signs that the mining industry could produce a lot of wealth that you saw, wasn't there?
Yeah, absolutely. I was realistically raised in a pulp and paper town, but was very close to the mining town known as Timmins, which is the gold town in Northern Ontario and very, very well regarded. And I figured as a young man that when we traveled to Timmins on occasion for visits, when there was a boom market and the commodity prices were doing so well, you noticed that all of these people were driving in these trucks, these big trucks. And I guess that impressed upon the mind of a 10 or 12-year-old as far as this is a pretty interesting business where you can go from basically walking to having the equivalent of a new Ford F-150 under yourself as far as values and as far as lots of, wealth that was created out of the ground through the natural resources.
So out of university, what were some of your first issuers that you worked for?
I ended up working for Inco, which is no longer an iconic Canadian company. Of course, Placer Dome as well, which is also very well known. And that was a really big step for me out of the Timmins camp where really I think I got the skill set as far as valuing projects that were near field to the Dome mine, which was the biggest and dominant mine in the region, and looking at what kind of acquisitions we could make in order to grow what we had, continue with development, and realistically feed the mill. Mining companies have a real liability once they create a 35,000 ton per day mill. And that is, how do you continue to feed it economically and in the best kind of, pragmatic manner?
And how were you doing financially in your career path at that time? How was your experience working in the mining industry reconciling with some of those wealthy truck owners you saw growing up in Timmins?
Well, it was fine, but I think a lot of young people can sort of sympathize with me to some extent that I had a lot of student debt. So I maybe went extra innings on the education side. And even though I received a stipend from Inco that basically paid for my education on the master's side of things, there was really no money to be made on the operations side at that point, at my level. And I wasn't overly, even though I view that I've done pretty much every job in a mine, I don't think I was overly skilled or competent at any particular one of them, which is why I was lucky to find finance, I guess.
Mm-hmm. And did you have that passion to move to the finance side? Because I've talked to mine engineers that specifically moved to the finance side of the business because they saw that was where the money was at.
I think that's where the money was at, but realistically, it really boiled back for me with regards to being interested in the stock market since day one. That was a big highlight of my week, is picking up the Wall Street Journal or the Globe and Mail and sort of looking through the stock tables and really trying to understand what these numbers meant and what the valuation was for these different companies and industries and how that pertained to. Yeah, I sure there was a wealth component in there also, but it was really the idea of how you built these companies and sort of what was important in that extent.
Before Rick Rule recruited you, you were also overseeing a project in Indonesia just post Bre-X. And for those that don't know, Bre-X was a large scam in the 90s in the junior mining industry, which caused there to be a lot of new regulations and reporting requirements in the Canadian markets to regain investors' trust. So, Michael, after this scam, what was it like working in the exploration industry in Indonesia, where the scam occurred, I should note, too?
Yeah, it was a very interesting time. I spent 2 years living in West Java and Jakarta, and what I was doing was really winding up our exploration projects. So unfortunately, it wasn't a growth scenario, it was a contraction scenario, but it was very interesting times, and I tell everyone who will listen that in 2 years, I think I aged about 12 with regards to the interest and the experience that we had. The scam, which we'll go into here a little bit more, known as Bre-X, was really occurred on the island of Kalimantan, which was completely different than Java. Indonesia is made up of about 13,000 different islands, but Kalimantan was really where the center was for the Bre-X issue. And it was a scam, but it's important that you highlight this because I think it's really noteworthy. If you think of the value of Bre-X at its peak was roughly $4.4 billion US. So in today's terms, that's about $8.8 billion. So think about that number for a bit, and then think how much NVIDIA breathes in and out on a regular trading day. I know it's a bit of an apples to watermelons comparison here, but the fact is, to me, it never represented a lot of money after I got to look at it. And I still think it's even more so true today. So what did Bre-X do? Well, it brought in some regulations, as you said, and I think that's for the betterment. I think that's really done some very positive, constructive issues for our industry and has made it more trustworthy. But the other issue is what it really undermined was sentiment. And sentiment was so badly gutted that I think the skepticism and the concern with regards to this, not only this company, not only Indonesia, but the whole sector being a scam has really sent it backwards. There are always going to be participants who do no favors or play right into that with regards to being examples of bad actors in the space, but that's true anywhere. Tech, technology stocks or consumer stocks, anything of that nature. We've seen all kinds of scams in different industries. And this one, I think, really undermined the confidence because so much in exploration is dependent on sort of good faith and the idea that you're forward looking and trying to do the right thing as an explorationist or a company trying to uncover a new deposit. So, you can think of mineral exploration as sort of the R&D unit within a pharmaceutical company or a high-tech company. So there is a big leap of faith that people do need to make when they when the CEO or the promoter behind the company or business is trying to tell you we're going to make a jump from step 1 all the way over here to step 3 and clear everything by a mile. So I think that was really the biggest issue with respects to what happened in the Bre-X situation. And you saw it immediately, into the years 2000. It was pretty moribund, pretty dead space as far as getting exploration dollars coming into the market. And then ultimately what saved or rejuvenated the junior market was really the commodity prices. And, hint, hint, that's what's happening today.
So is the fallout from the Bre-X scam, is that what pushed you into the finance side of the business? Or in your personal career development, what was the catalyst for you to go work for Rick Rule?
I think the personality, Rick Rule. I think he's larger than life. I know you've had him on his show. He's been on several shows, and he was a very interesting person that, quite frankly, I didn't know much about. And I think I was relaying to you once. It was one of the most interesting job interviews I think I've ever had. And as a bit of a side story here, and I don't even think he knows this, but I didn't know a lot about Rick before I met him. But I knew he was very knowledgeable in the mining space. So I was, being the academic that I was more than ready for him. I had studied, quarterlies for Newmont and Barrick and, Anglo Gold and everybody else under the sun, expecting him to spring on some sort of quiz question to me that I was going to pull out of my deep studies and answer. But he never did. He never asked anything remotely close to that. In fact, the only question he asked me is if I had ever sold anything, which I thought was really odd.
And your answer was?
I did. I used to sell barbecues.
Okay. And that got you the job? Or was it you were recommended to Rick?
In Rick's perspective, I think that that gave me clearance as far as being able to be a salesman. But no, in all honesty, I think he saw the ability of somebody who was very interested in the industry and brought knowledge already, but the sales aspect he was more than happy to help me with.
So Rick was operating just around San Diego, and the company was called Global Resource Investments at the time, right?
Yes, correct.
And then how many geoscientists like yourself were working for Rick?
At that time, not a lot. I believe it was maybe myself and one other. We had a resource department. We had resource geologists who would also work for the firm in evaluating of junior companies.
Did you have to develop your whole book of clients from scratch at that point?
I did, yes.
And how did you do that? What was your edge in gaining and keeping those clients?
I think there were two main things. I think it was the edge of being on the front lines and taking people who were attracted to our firm, largely via Rick and his investment profile or thesis, and then also being mentioned in newsletters. And then it snowballs from there. Bill, as you probably know, it's, success breeds more success, and my timing was excellent. I came in late 99 and basically things were starting to pick up quite nicely. Even stocks that were quote unquote failures moved up 35% themselves. This is sort of the beta of the market, just moving, the upward lifting tide type thing. So
what was your first year working for Rick, Michael? Your first year was
99.
99. And you worked for him until, was it 2000? What year did you exit?
I left California in about 2013, only to move over to Toronto and to move into Eric Sprott's offices on Bay Street.
Okay, so a 14-year career. When you started with Rick, obviously some of your net worth is public because you have to file the filing, so we can do the math, share price times number of shares owned. So you've done very well for yourself. But I'm pointing this out for listeners' sake. What junior mining stock investing and speculating done right can do for you. When you started for Rick, is there anything you can share about your net worth at that time?
Well, when I started, it was negative. It was negative with student debt and, cost of airfare flying to Southern California.
So you brought your expertise, you brought your work ethic, and you pursued opportunities. What were some of the greatest wealth building stocks that you put your client and yourself into when you were working for Rick during that time period?
There were several, and a lot of them followed a theme. We were, as you probably know, we were very big proponents of the prospect generator model, which really works at modifying your risk. And in the process of that, what we would do is really highlight exploration stories that really could drive home value. So I would say that was the biggest part of it. And then, looking at the fundamentals, again, in a strange way, using these Graham-Dodd type principles behind some of these stocks. I was a big owner, and my book of clients, I should say, were a big owner of a company called Southwestern. And Southwestern had fundamental value from my perspective of securities and cash of about $1.50. So the idea that I was buying it at $2 to $2.50, $2 or $2.50 meant I got their whole raft of exploration projects, several of which I was particularly keen on, at a reduced price, even lower than what the share price would indicate at the given time. So and instead of getting to specific examples, I think the idea is really there that you can really suss out value in the context of these junior stocks in what they have and what they hold. And I think people look at it in a variety of different ways. So stock investors or speculators really in this space, they believe they know something that the market doesn't. So they're looking for an aspect of either geology, either they've got a discovery in hand or they're on trend to a discovery. They believe it's a strategic piece of ground or something that a more senior corporate is going to covet. Or they like the leadership. They like the CEO. They believe in his vision. And then I think the second big sort of aspects, that, if you will, that people would look for, certainly our client base at the time, is sort of, is there an iconic investor involved? Is there an Eric Sprott who owns the securities, for instance? Is there a corporation? Does Agnico Eagle own 10% of the company? And I think another big point, and this is sort of coming around to this aspect of, well, what about Bre-X, is what about the insiders? What do the insiders own? Because I think we're still in a market that has very low sentiment. And so, and quite frankly, with limited amounts of knowledge or pockets of knowledge. And that's why, I really applaud what you're doing on your show here as far as trying to bring these issues to light and educate your listeners as much as you can in a very small space. But going back to my last point, the inside ownership seems to be very important at this point in time, I think because we're breaking out of this market. And, as a side story, the analogy I like to think of is, I like to think in terms of the Roman army, and people always talk about, well, Rome at its height, 100 AD, was this great, powerful military machine. And, why was that? Well, did they have excellent tactics? Yes, they did. Did they have, strong soldiers? Did they have, improved weapons and equipment? Yes, they did. They had all of these things. But the other thing that they had that I think people forget is they used to put their leaders on the front line. So if you were a general and you had a particularly risky plan in mind, you found yourself on the front line with, the dross soldiers, if you will, or your mainstream soldiers. And I think that really resonates in one's mind as far as, are you really thinking about the decision? Do you own the decision that you're making in this type of investment, in this type of risky plan that you're about to embark on? And that's why I think, what I brought through all of that experience is that ability and the leadership that I think is required at times like this, where you have to show your investing, your potential investors that you're going to bleed to and you believe.
Michael, when it comes to founder shares for these executives that are starting companies, I've been in hundreds of meetings over my decade at this now, to where they'll talk about their percentage ownership, but then when you ask them maybe about how they acquired the shares, what's their cost basis, actual cash put into this entity versus cash taken out in salary and maybe even bonus, they don't want to maybe share that as quickly as talking about their percentage ownership. What are your requirements when you're looking at a deal in terms of founder shares? Like, what do you expect and what do you consider is reasonable in terms of the pricing of those founder shares?
Yeah, it's a varied question. I don't think it's it's as individual as the specific issuer. Obviously, founders giving themselves too much cheap paper is just not going to work, unless, of course, they're taking all the risk at the beginning and setting up the entire enterprise. But then you're left with a company or a project that nobody else cares about. So what value is that? So it's a very tricky blend. I don't think there's a percentage or there's not a number that I think you can come out with, Bill. But I think if you hearken back to the ideas that every day you're making an investment decision to buy or sell a stock, even if you're just sitting and holding it, and your founders are not willing to put up capital at very important, critical times of the company's genesis and formation, then you really have to wonder why. So I think, you have to look not only at the quantum amount that they're putting in, but, the reasoning behind it and what's the strategy that's being developed. So it's probably not the perfect answer that you're looking for, but I think it's the most fair that I can give you at this point.
When you're looking at a management team and an executive and you're saying, should I invest with this person? How many other deals do you allow that executive to be involved in, especially when he or she is devoting some of their time to those deals, before you would say, bro, you're in too many deals. You're not going to focus on the one that I'm giving you the money for? Yeah,
less is more. I mean, that's really the case here. You're going to be dissatisfied with my answers here all through this interview, I think, because I don't have a number there either. I just think, a person doesn't have the ability to put their finger in too many pies and really be supportive or backing a specific investment idea and thesis. And these things, they take work and they take time. If I was to distill down my investment thesis with respects to speculating in junior resource stocks, I think a lot of what Jesse Livermore used to say, which is, the hard part is in the holding, but the good part is in the holding as well. So the hardest thing is the best thing for you. So in the sense of developing and building a company, you really need that full time and attention of your executives to be on board to really forward the company. Now, having said that, they were in a space that, it's not as sexy or as exciting as other sectors, tech, biotech, all these other types of things. So executives are getting a little bit long of tooth or spread thin because of the quality of those executives sometimes. So that's the only counterbalance I would offer in the context of, being involved in too many deals at once. Sometimes people are very much high in demand, but then you've got to wonder, are they lending their name in this case, or are they really going to put their shoulder behind the company?
Michael, one of the things over my 10 years of growing at Junior Mining Speculation that I notice is that I have to stay focused on my own psychology, but also learn other investors' psychology more. And helps me get an edge. One of the things you said to me in a prior conversation was, you said, when I was a stockbroker, my clients would resent when you would sell a junior miner too early, but they will forgive you for your losers. Can you break that down for us more? And what does that mean about the psychology of junior mining speculators?
I think it's the balance of fear and greed on an ongoing basis. So greed is incredibly powerful as well. And I think the idea that if you sell too soon or get out of a position, before it ripens to maturity, that you've somehow done a real disservice because you've taken all that risk. Going back to my example about Jesse Livermore and reading his ideology, I mean, really it's this, people sell their winners too soon because they have a fear of losing that profit. So I think you're balancing that element of fear versus the element of greed that people have on an ongoing basis. And every person has a different blend or makeup. The reality is I like to say 90 to 95% of people are actually quite reasonable. And if you're adjusting your risk and you can rationalize it in that sense that you are in a very volatile, risky space, and you're able to moderate that risk relatively quickly, that you avail yourself of that when the time is right. And in a sense, turn your back on the idea that, you're going to be the high watermark of, or the all-time high of that stock. I think there's a degree of, hubris that's involved in the context of these speculative stocks. And I think you've always got to keep that in check.
So, Michael, towards the end of your 14 years with Rick Rule, you obviously developed a network, and part of that network was luring you to the issuer side, weren't they? And how did that transition to going to the issuer side of the business occur?
It occurred because of the fact that I saw real opportunities in building some of these junior companies. And there was a bit of a lack of direction in some cases with respects to what I think I could bring to the table, either in capital markets or marketing these companies on a go-forward basis. And it's something I had always wanted to do, to run a junior. Now, to be very honest with you, Bill, there was a steep learning curve that I had to go through. It's not the same as figuring out to raise money and write checks as it is to get into the business of the business, as I call it. So there are a lot of moving parts. There's a lot of executive moves that need to be made in addition to the capital that we always talk about. And I'm sure your listeners are, first and foremost, as they should be, interested in. So I think that you're looking at a balance of a lot of real hats that the CEO needs to wear with a junior company in particular, because you don't have an army of employees. You, the CEO, are looking at running basically the show from top to bottom. And I saw my ability to really help out in that regards and taking a shot at the top job myself as I crossed the street.
What's the number one quality you look for in a junior mining executive?
I think principles and reasonableness. I think that's critical. I think, you have to have somebody with a clear head, strong thought process with regards to what he's getting involved in, and is going to be realistic about the goals and the end goal that you have in mind and the pathway to get there. You can look at individual companies and projects and say, are they have to meet a certain checklist? Are they strategically important, for instance? Are they geologically open-ended? Are they logistically undeniable? And is this an area where you can add value either by additional exploration or bringing new technology to the situation that brings out and relieves a lot of value? So I really look at the CEO or management's ideology and what they are trying to achieve in the context of how realistic are the things that they can deliver.
As you shared with us, when Rick interviewed you, he said, can you sell or have you sold anything? So how does that play in when you're vetting an executive that you might invest in? Can you sell? You ask the executive that. Like, how important is that to you on your checklist of things you look for?
It's less important to me because I think
is that because you're a geologist?
Mining engineer, but right. Yes, I think that is an area that can always be helped with. I don't think I'm a marketing wizard per se, but I think that there are certain elements that can be brought to any story. A good story sells itself. And again, thinking about my background a little bit, I really came at this from the view of what does the senior company want? What do they need to see as opposed to what the retail or investing shareholders would like to see and the fantasy therein. So I think that it's important to be reasonable and rational in that regard. So I'd rather see a real strong geological plan and model that's ahead of the company as opposed to saying this guy's a whiz-bang salesman and he can sell, ice cream to polar bears type thing. So I think that's the most important aspect, is that kind of rational, reasonable development of the project. Yeah, selling. You can hire or look at additional marketing help, but I'd rather see the project sell itself.
When we look at these small Explorcos, $10 to $20 million market caps, and we envision them going after big ideas, big projects that might be worth $1 to $2 billion someday, but a $1 to $2 billion discovery is going to require a lot of capital to get there in advance. So what is your take on owning a potential big target 100% outright versus JVing that? You said earlier when you were working with Rick, you were in a lot of prospect generators, so the risk was mitigated to some degree with that. What is your take on this, please?
I think there's room for both philosophies. I think it depends on your risk temperament in the space. So you're already in a risky space. If you're looking at prospect generation and joint ventures, you're moderating that risk through the balance sheet of the senior or the leverage that's being brought from other aspects of the market. You won't make as much money that way. So if the greed element in you is saying, I do want to hit the home run ball, you've got to swing the bat harder. And that means taking more risk and looking foolish, totally missing the ball. So that is those are the two sides of it from that perspective, and where you want to be in that realm. It's not a perfect correlation from one side to the other, but I think you have to decide again, boiling back, what kind of investor are you? Now, there is room for both aspects, for sure. Just like I'm sure a lot of your listeners have more than one or two stocks in this space. So I think that this is something that they can balance. Whereas, looking at a prospect generator, you can think of it as owning 4 or 5 different companies within one envelope. I personally like to, maybe this is my hubris speaking. I like to think that when I'm looking at a specific project, a specific target, that I'm doing a lot of that homework that eliminates let's say some of the lesser choices I could have made, and really focus in on trying to hit that home run ball.
So you're involved with some companies publicly, and we can just look at your SETI filings and see who you're working with. But beyond the companies that you're working with publicly, how many do you hold in your personal portfolio that the public doesn't get to see?
I feel like you're a auditor, accountant, Bill. Not that many, not as many people might think.
Some guys will only invest in their own deal. I've been told that by a lot of people on the inside in Vancouver, Michael, where they say, I will only invest in my own deals. So
I can see the rationale in that. It's not one that I ascribe to. Maybe I have too many friends and colleagues in the business that I trust, and I think that they are, they're not only are they good storytellers, but they know how to tell the story to me. So to try to give you a number, since I've been so evasive on numbers on this whole interview, I think it's about 10. 10 sort of outside deals, and to various sizes and shapes and forms. I think when you go, from my perspective, at this point in the market, when you go too far beyond that, then you're really diluting that intellectual capital that you may bring as an analyst to looking at the different companies, say company A versus company B. So I don't think you have to spread the net too wide. But, there's also the idea that there's different commodities, there's different jurisdictions, there are different very big macro issues that are of difference to the different companies, as opposed to just getting it right geologically. So, I have a better cast of friends than some of the other CEOs you've spoken to, but I tend to have a high degree of trust in people who are bringing me ideas as far as what else to invest in.
And what stage of junior miner do you invest in? Are you in the producers or mostly in early stage projects?
It's the early stage projects. I'm really looking at the alpha component to the stocks. I think because we're still at the inception of this bull market, I can afford to make mistakes at this stage, because I think that the rising tide is going to save some of the lesser ones out, or the unsuccessful ones out. And then it's going to be a matter of risk management with respects to those different companies that are in the portfolio at the time. I think if you step back and you look at our sector, there's a real need to get new discoveries. I think you're seeing it all over the place. You're seeing the senior companies, to name names, Agnico and Bre-X, who are really rationalizing operations that they already have. So I think back to, well, why are they doing this? So the answer that I kind of come up to is the fact they're looking for these top tier jurisdictional type plays where they can get additional quality and or offset some of the production that they're looking to gain. And I think that's going to become a very big critical aspect of exploration going forward. We've denied it for too long, quite frankly. And we're going to have to come up with really creative, innovative ways to bring a lot of these deposits on stream quickly. And that means reducing bureaucracy, and that means upping the capital, the access to capital in this country, etc., to try to get these companies, to get these projects up and going sooner as opposed to later. Because otherwise, we're just going to keep driving the commodity price up to just nosebleed type levels. Just to add, if you look back to the free cash flow numbers that these companies, the senior gold companies, let's say, are enjoying as of only 3 years ago, it's pretty much twice what it was today. So they like that profile. And now the idea is, well, how do you continue with that type of growth? And the answer is they're going to have to feed into the junior space and take a lot of different shots and look at a lot of different projects here in a relatively compressed amount of time.
So you're involved in a lot of discovery pursuits. Let's talk your book now, and I want you to share with listeners why you're involved with each of these issuers. Let's start with Eminent Goldcorp, one of my former show sponsors from a couple of years ago. Why are you involved with Eminent?
I like the jurisdiction. I like the big home run potential that they have at Hot Springs. I do think it's a Twin Creeks type analog.
In Nevada.
That hasn't properly been looked at. They've done themselves a real service by acquiring this project called CELTS, which is an analog for, Silicon, which is a new discovery from Anglo, also in Nevada. And I think Nevada is a great spot to be, always has been, probably always will be. And with the current administration with regards to, fast tracking, or at least minimizing the bureaucracy involved, I think it's a real bonus.
You're also involved with Torq Resources, another one of my show sponsors, and you and I only spoke for the first time last week, so those were show sponsors before we even got to meet each other. But Torq Resources, why are you involved in Torq? And can you also talk about how Torq has pivoted multiple times over the years since you've been involved with it? Why do you when to abandon a project to go a different direction? Could you share from an executive philosophy on that, please?
It's a great question, Bill. Again, I think the issue with Torq when I started is we were looking for the right project, and we were very critical with regards to getting the right property in tow, even though we were a well-funded, let's say, shell at the time. And it was difficult. Raising money, in a sense, is easier than finding a great project that you really want to latch into. So we took our time. We took a few shots, if you will, at different types of projects until we found the assets that we have now in Chile. And here again, similar to Eminent, what Santa Cecilia offered, which is the main project in Chile, was really this big swing of the bat. It was an oversized project for a junior, certainly in a market that carried such low sentiment as it had. And I think what that company has done now was the right thing in getting a senior involved, in this case Goldfields, to joint venture it. Because, here's an example where you can't carry the stick in the context of real thorough exploration and development of the project. So you have to open up the other, your access to capital, and that often involves bringing in a senior. I mean, fortunately, the technical characteristics and merit are so high on the project that Goldfields was readily involved with what we're doing here, and I think, they're feeling out another big classic Chilean porphyry in the southern Maricunga.
You're also the chairman of TDG Goldcorp, and you have the tiger by the tail on this one, it looks like. Why are you involved with TDG, and what's going on with this discovery, please?
I've been a colleague and friend of the CEO for a long time, even before developing TDG Gold. And we have a certain formula or blueprint that we like to work on, that we've been successful with other companies, and we've lent that into TDG. Basically, it's looking at the logistical importance of this ground that's here. And we think that there is great geological potential. We always have. And also the social licenses are already well in place for that fast track development. So it hits all of those buttons as far as the project itself. And then lo and behold, as of January of this year, a major discovery was found right on our boundary. The second highest grade porphyry in all of British Columbia. And with all indications and all, from my perspective anyways, as a geoscientist, indications that we're looking at real growth on our side as we follow a significant trend or fault. So I think that's a matter of developing that, and that's the real big upside that we're in the context of finding. The fact we're in a very good neighborhood surrounded by majors, including names like Freeport-McMoRan and also Centerra. And Centerra having $1 billion of infrastructure about 30 kilometers to the south of us means that the infrastructure component is there readily at hand. And again, remember what I said about when you're a mining company and you've got a big mill, you've got a big problem. And I think that's going to continue to be an issue for a company that wants to fast track resources in the area. So location is excellent, and the geological potential now is just starting to be known.
And your holdings in TDG are quite large. You were a 10% shareholder at one point, I believe. How did you acquire those shares? And I'm pointing this out for the sake of listeners. Wealth through discovery. You're personally experiencing that through the success of TDG. Can you share about your shareholdings, how you acquired it, and where it's at now, please?
Sure. I didn't get founders shares, to get to your point earlier. I bought them off of a junior company that owned the project before, and I purchased them off of them. And this was very early days when this was still more vision than materiality. And I think when you're looking at companies that are sub 20 million market cap, as this company was at the time, that's really what you have to have faith and confidence of what you're doing, and really digging into your evaluation and the metrics you believe are potentially there with the company that you're buying. So I did buy them. I did buy them when the company was sub 20 million market cap, but the reality was there was a very big seller who wanted to move on to something else, and that was fine. But I think the biggest level of pride, if you will, I have in TDG shares is the idea that I bought along the way. So over the last year, major financings, I haven't been afraid to buy, say, about 2 million shares or $1 million worth of stock at these types of prices, or prices of the most recent financings, 50, 60 cents. And that's all public, of course. So therein you have, the beginning was vision, and that rationalized my first acquisition of shares. And now you have the follow through of where I can start to see the rubber meeting the road in the context of the geology and building an area, a jurisdiction, a district play, a tier 1 project.
I remember you told me last week when we were chatting, when you were a stockbroker, you said, Bill, I was always the last one out. So what is your exit plan now for these companies?
If the hard part is in the holding, and the holding is the most lucrative part, then this is going to force me to be a good speculator. As a broker, the way that it always worked with us was the idea that your clients got out first. So it wasn't a matter of playing the market. So I think that's probably one of the best instincts I carried with me through that process of being a broker was you're looking at projects where they do have an end. And as I mentioned earlier, that complements with the fact that I'm looking at a large corporate buyer to eventually, acquire the whole kit and caboodle. And I think, and if I was acting selfishly as a broker, which I'm not a broker for anyone except for myself, these days, I would look at where the end is in the context of, not necessarily being the guy who's the fastest on the trigger or the quickest on the sell button, but buying something that's fundamentally valuable in a sector that really needs more value.
Are there any other companies you're involved with that you'd like to mention?
I'm involved with just recently Almaden Resources, which is backed by Morgan Poliquin, and it is an excellent company that made a great discovery, and I can't speak highly enough about the geological vision that Morgan Poliquin has in the context of looking at new projects in new regions. So that's another one that I've just recently joined.
Any further insights you'd like to share with my listeners, investors as retail investors in the sector? And there's industry people that listen as well, but particular for retail investors that are learning how to do this right profitably. Any other insights you can share as we conclude?
Yeah, I would reiterate what I've said with regards to being, don't be afraid of the gain. Don't have a fear of losing out on your profit. If you've got a winner, you've got to let your winners ride to a large extent. Your winners will amortize the more numerous losers that you're going to have in the context of playing this market. I also think it's very early. I think the sentiment is still particularly low. There's a lot of signposts along the way that indicate to me that this is early. The merger between Teck and Anglo, for instance, I think is a sign. I believe that mergers happen at market tops or market bottoms, and I don't feel that this is the top. So I think that and others, and the idea that there's so little capital in this space means that it's very early days. And the challenge is going to be finding the right kind of companies to invest with and sticking with them. I think that's sort of the issue now. You are seeing major financings occur here and there, but as opposed to being, suspicious of them, I would just say that this is an area, this exploration hasn't seen a lot of capital in quite some time. And to a degree, we have to play catch up, or as I said, compress that time frame with regards to making the next discovery.
Michael, if listeners want to follow you, how should they do that? Or should they just follow you via your SETI Insider followings? Or do you want to be followed?
Well, I mean, there's always active bullboards with regards to SETI filings, so I think that's an easiest place to find me. But I'm always open to discussing about any of the companies I'm involved with at any time. I feel like I'm an open book. I think that's also a very important aspect of any CEO of a junior exploration company, is to be able to talk to your owners, your shareholders, and really give them the benefit of the doubt in clearing things up with regards to where we are headed with this company. So you'll see my name affiliated with these different companies, and by all means, feel free to reach out to me in the context of explaining what they're doing. And if I don't have a great answer for you, I'll sure as heck find somebody who does.
Well, thank you for coming on the show and sharing your insights today.
Thank you, Bill. I hope this was useful to your listeners.
Very useful. Thank you.